welcome to the Moonlight Side Hustle and Business Show. I am your host, Eric Lindsay. Here at Moonlight, we choose to focus on achieving financial security, not job security. And today, we are here with Mukarram Maju. Mukarram is the guy when it comes to alternative investments, whether it's gold, silver, or even crypto. His journey has taken him through the financial epicenters of Asia, the Middle East, and the U.S. Without further ado, welcome to the show, Mukarram.
Thank you, Eric. It's great being here.
Well, I'm glad you was able to make it out. It's fantastic to be able to have you on the show. You've got quite the background. You've been around, well-traveled, it looks like. So you've been in the Asia markets, Middle Eastern markets, and also you're currently residing within the Orange County of California. So it seems like you're really experienced with the different areas of the world and the financial sectors. And so we're really excited to be able to have you on and learn just a little bit more about your background and what it took to achieve the level of success in which you're experiencing today, and also take a peek into what it is that you're seeing within the financial sector. So it's definitely going to be an exciting show. But before we get into those details, if you could share just a little bit more about yourself and also how you got started in investments, that'd be great.
Yeah, so everything started back in 2005, right? So I became a commodities trader, commodities broker at that time, licensed, and the whole process of becoming a trader, because for me that was a big deal. I wanted to learn how to trade the markets, and I was able to work at a couple of different firms. And then by around 2007, after learning and understanding the industry, having some really great mentors, right? And I'm very, very grateful for that, where the mentorship was not just about, the markets itself, but also about the work ethic and the knowledge base, right? That helped a lot. After that, I was approached by a couple of different individuals, and we started a partnership, right? And then started a firm. But then it evolved. And in 2009, I had my own firm, because obviously, and these are things I think we can talk to your audience about, when you start a business, sometimes partnerships work out, sometimes they don't, right? Different personalities, different work ethics. So in 2009, I had my own firm, and it was called Blackstone Commodity Group, and that, by the way, Blackstone Commodity Group's name today, this year, is changing to Bullionite Asset Group. But we've been Blackstone Commodity Group since 2009. And there's a reason for that, because there's a lot of alignment with our trading education side, which is Bullionite, right? But that was the beginning. And then from there, we committed to, with myself and my team, we were committed to education, because our motto is learn, invest, succeed. And that was a big deal, because that was during the market crash, 08, 09 market crash, right? And a lot of individuals will call us and say, hey, my broker's not picking up his phone, like whatever brokerage firm they were in, right? They're not talking to me. It's been 7 days. It's been 14 days. And then we realized, hey, you have to educate your clients. You have to be there for them during the good days and the bad days, right? And that's what makes the difference. And then from there, we started seeing a lot of the things early in terms of what the country was going through and the financial policies and the fiscal policies that the government will come into. So we diversified into alternative assets like gold, silver, caught that big bull market 09 to 2011 in gold, and in silver, that big bull market that happened at the same time, then crude oil. So there was a lot going on. And then the rest is history. That's where we stayed into alternative assets. And then crypto became big, right? After its infant stage, then we got into cryptocurrency. So that's how it all started.
Okay. And so did you grow up in the California area, or did you immigrate in from another state or another country?
Yeah, so I came to college in Florida. So from Florida, I finished my education, started actually in commodities in Florida, right? And then from there came to California. And at one time I had kind of a bi-coastal firm where I would fly back and forth, and that became really exhausting. And then having a family, I had to learn a lot, right, on how to manage my time and do all that when I had my first son. So that's when I decided, hey, let me keep my home base from California And then obviously I still go back to Florida. We have lots of things going on, right? Real estate and different investments there, and internationally as well.
Okay, sweet, sweet. So if we could, let's talk about some entrepreneurial type of things. And so it sounds like you mentioned that you got into commodities, you got into a partnership, and then you guys began to grow. You eventually broke away, and now you've got two segments of your business. So let's go back to the beginning. There's a lot of guys there in the process of trying to get their business off the ground, and as I mentioned to you earlier before we went live, that's always the toughest time. Whenever you're trying to start a business, a startup, getting that momentum, getting that traction is the most difficult part. How did you navigate that, and what did it take for you to be able to get that type of traction when you were first starting your business?
Yeah, I think, see, for me, it was a little different because we're in an industry that's highly regulated, right? So from the beginning, commodities, trading, all that. So today I would suggest to people, hey, when you're starting when you're starting your own business, it's good to have a side hustle while you're working at a company. But we couldn't do that, okay? Because we couldn't be working at a firm and then starting our own firm. So for us, it was more like risky, right? It was a very challenging decision. We had to leave the firm, start our own company, and then do everything that came with it. Now, hindsight, I love that it worked out that way because I started to understand risk better, right? And I was able to take on risk. Like today, I can take giant risks, but understand what that risk means. Because a lot of time, people have a misunderstanding of risk, right? And because of that misunderstanding, they prevent themselves on doing great things in life. So once you understand risk and then you can manage it, then all of the decisions later become easier. So today I'm very grateful for the fact that I was able to kind of understand risk in a different way at that time. The other thing is it forced me to get better very quickly, right?
Mm-hmm.
Because nowadays a lot of entrepreneurs, when you always have kind of a comfort zone, right? And you think, oh, you know what? I can work on it a little bit later. I can learn this a little later. But what it allowed me to do is I had to be like a vacuum knowledge, right? Then take action based on that knowledge, you know? So one of the things I would always say to people today is don't delay that transition when you understand that it's time to do it. Like your soul's going to tell you that it's time to do it, right? But the only difference is if you're not in a regulated industry and you're allowed to have your own consulting firm while you're working as an engineer or while you're working as whatever, right? It's okay to have that job and still and then get going on your business. But make sure that you're fully committed, right? And then don't take too long. And that's why I love what Elon Musk says, instead of thinking what you can do for 5 years in 5 years, what could you do this week kind of for your company that'll get you the 5-year kind of result.
Right.
That's an important thing. The other thing I think a lot of entrepreneurs face in the beginning that I want to maybe share and that'll help your audience is understand money. Okay. And this has nothing to do with the conventional understanding of money. Like, oh, you have to save money, don't spend too much, budget better, none of that nonsense. Okay. What I mean by this is money. Really ask yourself the question, what does money mean to you? Most of the time, the teaching that you have from your upbringing or your parental influence on you or your professors or college teachers or high school teachers, they teach money as a currency. Money is not a currency. It's a tool. Right?
Yeah.
So always remember this, that time is your currency. And what I want to make sure that people understand here is that from an investment, like being in the investment world and being around money, we understand that money is limitless. There's enough of it. Like we're in a country, right? In our country, we print money every day. We keep printing it, right? So it's limitless. So don't exchange blocks of your limited resource, which is your time, for a unlimited resource without getting a significant amount of value for that transaction. That's very important. right? And that's why when you build your own business, just make sure, you know how people say, well, I don't know if I want to put this much time into it, or I think I should, only do it on the weekends. No, you can't do that. You got to put
Mm-hmm.
everything you have into your business if you believe in it, as long as it's verified. Because you can have blind belief, right? But if you have a verified product, a verified result, then go all in. Do everything you can.
Yeah, I love that mentality of Elon Musk because he's got the um, just get a lot of things done mentality. And I think I heard him one time say, try to get like 3 years of work done within 6 months, and it's just that mentality that he has that is led him to the results that he has on top of intelligence as well. I mean, I think he is really sharp. He learned coding. He was really into computers, etc. And so it's a lot of that education has boded very well for him to be able to achieve what it is that he's achieved. But on top of that, his work ethic is impeccable. It's just amazing how much time he puts into what it is that he does. So that's really good that you was able to touch on that. And so before we move to more current events, what did it look like for you? We know that you got started out of college. You was transitioning between Florida and California. And then you began to get some traction. So what did it look like for you to be able to get that traction? And if you don't mind, I know this is kind of personal, but did you have to not be able to spend as much time with family and friends as you would have liked during that period of time when you were trying to get that traction?
Yeah, I think there's a few different layers to that question. Um, so for me, right, I've always believed like that drive inside of you um, is something that some people have a confusion with, right? Because people have decision making paralysis, right? So here's where I think it's very important how you understand your vision, right? And in the beginning, you're not going to have all of that mapped out, right? But you'll know like that why. This is why it's very important. You have to have your why figured out. Like for me, when I wanted to do this, my why was to make significant amounts of return and at the same time get to live a life that I feel that I can help and give value to whoever is working with me, right? Now, that's not going to happen if I'm not selfish in the beginning. See, that's
Mm-hmm.
very important. You can't
Mm-hmm.
be like, hey, I want to have a great weekend. I want to go to my friend's birthday party, right? Now, I'm not this depressing human being. I'm not telling you don't, enjoy your life. But in
Mm-hmm.
the beginning, guys, it's very, very important, at least in that first year, that you put in everything that you know is required and your business and your vision deserves, right?
Mm-hmm.
So, and that's where the risk taking comes in. Because if you believe in yourself and if you believe in the work ethic, then you'll take the risk. Because the reason why people don't take the risk is because they don't believe that in their work ethic. Because you see how some people can start out like in the first 2-3 months really going at it, but then
Mm-hmm.
they start plateauing and then dropping. That's because they don't believe that they can keep up that momentum, right? So there's ways to do that. Like I think I remember in one of your podcasts, you were asking about, hey, what kind of schedule did someone have, or what did you do? For me, it's not about scheduling
Mm-hmm.
because scheduling means that you're willing to be inside of a comfort zone.
Mm-hmm.
So, like Tony Robbins says, take massive action.
Mm-hmm.
Because when you take massive action, you're going to change things, whether it's in your life or in your company. So that's why for me, like when people ask me, well, how much sleep did you have? Well, I wasn't really counting it. It doesn't really matter. You know what I mean? Like
Right.
you work late nights, you work early mornings, you work whenever you have time.
Mm-hmm.
But what I would suggest is, I noticed in one of your conversations where you asked, hey, do you do something while you're at work? No. if you're working for another company and you're starting a side hustle, here's one of my biggest recommendations. Don't try to do something for your side hustle while you're doing that job,
Hmm.
because the quality of what you're going to do
Yeah.
for your company is not going to be that great. Not the company you're working for, but the business that you're starting, the
Hmm.
quality is not going to be great. So your representation is not going to be great. So what I mean by this is guard your time blocks. So have
Hmm.
time blocks where you say, hey, I'm going to work on this for my business. And
Hmm.
you guard it with everything you've got and do everything in a high quality way. And then go back to whatever it is that you're doing, right? So for
Hmm.
me, it was early mornings, late nights that I
Hmm.
had to keep working, keep working. And I didn't think of it as I'm sacrificing sleep or time, because for me, it was like quality, guarded, time blocked work.
Hmm. Nice, nice. Okay. Yeah, that's well said. And I'm with you 100%. I'm in a process of reading Cal Newport's it's his newest book. I think it's called Slow Production, if I'm not mistaken. Slow Productivity. And he was the author of Deep Work, and that was profound. And so his whole premise with that is you want to do extremely high quality work, and in order to be able to do that, you have to have uninterrupted time to dedicate to it, so that you could do elite type of work, because most people are so distracted. They're either scrolling through Instagram, they're searching through Facebook, or they're just trying to do multiple things at one time, when really you're going to give the better quality of your time and attention if you're just concentrating 100% laser focused on one task at a time. And he is just really huge on that. And so I love Cal Newport. He's amazing. And so yeah, I love that piece what you mentioned there. So I'll definitely have to consider that moving forward. We're going to move things into current events. And so we know that you're into the commodities. You assist people with um, gold, silver, alternative investments, cryptocurrency. Just kind of shine a light on that. Share with us a little bit about what it is that you do as of today, and also the teaching component that you have.
Yes. So, since 2009, like I said, having a commodities firm and an alternative investment firm as we diversified into it simply means this, right? Like right now, everyone has a stock account or a 401k or an IRA where you're exposed to stocks and bonds. Pretty much that's it, right? And then you're at this mercy of the market, like every 5 to 7 years, where you see your net worth drop and then come back and drop and then come back, right? So for me, what we do for our clients is allow you to kind of think like a hedge fund, right? Because if you have an IRA, if you have a 401k or a previous 401k, because there are some rules in how you can transfer it, you can move an IRA into a self directed IRA. You can
Mm-hmm.
transfer or roll over a previous 401k into a self directed IRA. Or if you're older than 59 and a half, you can move your current 401k. It's called an in service rollover into a self directed IRA. Now, why do I say self directed IRA, self directed IRA over and over again? Because within a self directed IRA, you can now own physical alternative assets. Like you can own physical metals like gold, silver. Look at gold. Gold's gone up almost 100+%, right, in the last year and a few months. Why? Because the landscape has changed so much, right? Like we have a lot of geopolitical tensions, we have safe haven issues, and because of that, I believe people should have the access and the freedom to control the destiny of their money, right? You have to control the destiny of your money. You can't wait for your broker to say, well, guess what? Now you've lost about 100 grand, 150,000. And now if you wait another 5 years, it's going to come back. And during that time, who's lost? That opportunity cost. So what we teach our clients is how you can move your funds from one asset class to another during these cycles and then increase your net worth. Because getting a 5%, 8% return every year may sound good, right? But it's not changing your net worth. And if the financial moves that you're making are not net worth changing moves, you're never going to get out of this rat race. So that's one of the biggest things we do. We help clients who have retirement accounts or previous 401ks or existing 401ks move funds without taxes, without penalties, because you can do a lateral transfer of assets into self-directed IRAs where you can own physical alternative assets, right? And alternative assets include real estate, include real estate internationally as well. So there's a lot that you're going. Then cryptocurrency is an alternative asset, and you can see what kind of multiples of returns it gives you. Obviously, there's volatility and risk management and different things. So that's one of the key things we do. The other thing is the education component, not just in the trading education side, but also for like individuals who may have had an account with another brokerage firm for 20 years, right? Like different firms, but they really don't know what they're doing. They don't know how it's giving a return or not giving a return. I've talked to people who sometimes have a few million in an account and they're making less than a cup of coffee at like Denny's in their account. You know
Wow.
what I mean?
Yeah.
Really. And they don't know. So what
Mhm.
happens is I want to educate them about the momentum of the money, right? And the flow of money, because then you become a very powerful investor.
Yeah. Yeah, they could easily put that into a money market and did better than Starbucks.
They
So
could have easily slept, every day and not done anything and still made the same return.
exactly. Yeah. Okay, so that's amazing. You mentioned net worth. Educate us briefly on what's so powerful about net worth, and how can you go about building that?
Yeah, great question. I love it, Eric. So net worth to me doesn't mean, okay, oh, I have a $5 million net worth, I have a $10 million net worth, right? Because money over a certain amount really doesn't change your life that much, but it's what you do with that money and the happiness that brings you with what you do with that money. Because, okay, let's say you made $1 million last year and this year you made $3 million. Yeah, you can buy more cars or you want to buy more houses or whatever. It's great, more watches, all that, right? But that's not really going to give you happiness, right?
Mm-hmm.
What's going to give you the happiness is the progress. Like Tony Robbins says, progress equals happiness, right? So your net worth has to be built with a platform that is focused on continuously increasing that net worth. Because now, if you can multiply your net worth, not just your returns, then what you can do is you can start dreaming big. And it's no longer a big dream, right? Like, for example, a few years ago, when I was doing this, I was thinking, hey, it'll be great if I can invest from my company's returns in Asia, because they have the economic tigers and like Malaysia, Thailand, Airbnbs, all that stuff, right? But I couldn't just do it like if I just wanted to do it that day, right? Or that year. I had to come into a philosophy saying, hey, let me figure out a way how to increase the net worth of everything that I'm doing in multiples. Then I can take that retained earnings and then go over, and fly 14 hours, 18 hours, wherever. Like I was in Australia, 8 months ago. And then we're in different parts of the world because now it allows us to dream big. And then here's what's really cool about this. We can then take that and make that project, because it becomes like a side hustle for us, right? Make that project benefit many other entrepreneurs, because there might be two different partners we may have to get in that country, right? And then their workers and the staff. Now that brings you a significant amount of value and it increases your why. Because when you come back here, guess what? You have a new energy. You have a new motivation, because now you are helping you're helping other people change their net worth. And that allows you to continue to grow your company, because just making $1 million or $2 million, like you can get lazy, right? You can be like, hey, I don't really need to be on this high drive, or I don't need to put this much into it. But once you start doing more, it's great. So it reminds me of a story, right? I mean, from Branson's, a few years ago, he wrote a book. And in that book, he talked about when he wanted to start Virgin, right? He didn't have money, right, in that magazine. And he went around and asking all his friends and relatives. Then there was this one person, I think his aunt, who had like,
Hmm.
she was probably the least net worth person out of the people that he asked for his money.
Hmm.
And she said, yeah, I'll give it to you. And when he asked her later, after he made, his money and paid her back or so, he asked, why did you do that? She said, what's the purpose of money if I can't help you get to where you want to get to?
Mm.
Now that's massive.
Wow.
That was like life
Yeah.
changing for me when I read that,
Hmm.
years ago.
Right. Yeah. Yeah, I love that book. I read that maybe about 3 to 4 years ago, and Richard Branson, he's very eccentric, but he's a wizard when it comes to business, though. I mean, that guy, he started with the magazine, and he rode into airlines and all kind of other things, and so he's just kind of got the Midas touch when it comes to business. So I love following him as
It's
well.
just how he perceives risk, right? Because in that same book or somewhere else, how his wife said that he would sometimes come to her with a couple different people and say, "Hey, you need to sign this and this and this and this," and she would like, "Okay," because she trusts him. She signs it. Later, she finds out that they've kind of put Necker Island on mortgage or whatever, right? Because that's the risk. It's
Yes.
when you understand risk, and here's what I hope this really helps your audience, right, and the listeners.
Hmm.
Risk does not mean that you're guaranteed to lose money, because everyone
Yeah.
thinks of risk as you're guaranteed to lose money.
Hmm.
Risk simply means that there is a possibility that you can lose money, or there
Hmm.
is a probability that you can make money. And I
Yes.
chose those words very carefully, because the way you manage that risk will
Hmm.
increase the probability of making money and reduce the possibility of losing money. Okay.
Exactly.
That's it. This is why, if you look all around you, like look at the banks and institutions and everyone that want your money, right? What they want to do is they want to talk about risk and then put the handcuffs on you, put you in Alcatraz and make you look at the bay, right? And wish you
Hmm.
at the bay, but they take your money and then build a bay, right? So this is
Hmm.
why it's very important we educate everyone. Hey, don't be afraid of risk, but understand it and know how to manage it.
Exactly. Yeah, that's well said. Um, so the market's been in influx. It's definitely been having some difficult times ever since 2022 when the Fed began to increase the interest rates. I know we're in commercial real estate. We own right at 146 units, but it's been a challenge for us. Deal flow has slowed down drastically. Brokers haven't been closing on a lot of properties, and so the market is definitely seeing some better days. So that's on the real estate front. And so I'm pretty well versed when it comes to the real estate arena. What are you seeing on average? And I know you look on a global level as well as local. You've got some real estate assets that you guys are a part of here. But how are things going? And what are you seeing? And also, what do you think is on the horizon?
Yeah. So first thing, I think it's not like it's not difficult right now to perceive this. It's an extremely volatile time in the markets. Okay,
Hmm.
it's no secret, right? It's been extremely volatile for the last maybe 8 months or so. But here's what's important: volatility is not something to be scared of. Okay, because without volatility, there will not be a price increase or a price decrease. You have to get that, right? Especially in the
Hmm.
markets. Real estate's a little bit different because it's more of a hard asset, right? But if you're in
Hmm.
stocks or commodities or gold, silver, or oil, cryptocurrency, you can't
Hmm.
say, hey, it's too volatile, so it's a bad thing. No, it's not a bad thing. It's an amazing thing that it's volatile. But the difference is, how do you harness the energy of that volatility and make money from it? And here's where we're different, and we educate this with clients. There's something called sensible volatility, and then there's nonsensical volatility. Sensible volatility is exactly what you need to make multiples of returns on your money. And if you learn how to do that, that can change your net worth. Now, nonsensical volatility is the volatility that just doesn't make any sense. During that time, you just sit on the sidelines if you don't
Hmm.
understand it, because that's your risk management. Now, I'm going to explain to you, because one of the things that we pride ourselves with is that whenever we say about these steps, hey, do this or do that, we actually break it down. So when I say, hey, what's sensible volatility and what's nonsensible volatility, here's what I mean by that. if you're looking at a market, and if the market keeps taking out the previous day's lows and then the previous day's highs, that's nonsensical volatility, guys. You don't want to trade that market. A sensible volatility is the market will go up and down, but it's not taking out the previous day's lows and previous day's highs, but it continues on a trend. Whether it's a mini trend or a short-term trend, it doesn't matter. It allows you to execute a strategy properly. That's sensible volatility, right? So that's one. There's heightened volatility, but there's also lots of opportunity if you know how to navigate that, right? Secondly, I think this is a very, very interesting time because we have certain forces in the government and certain things happening outside the country that allows you to really be someone who can be a detective, right? Like a forensic detective, and figure out, hey, what are the motives and what does this mean? And once you figure that out, there's a huge opportunity there because the timing becomes great, and I'll give you an example. For example, with cryptocurrency, right? So once Trump got elected into office, a lot of people said, hey, cryptocurrency is going to go up and go up and it's going to go crazy. And it did in the first month and a half or so. But if you watched it, when some of the things that that people expected him to do directly for Bitcoin, he didn't end up doing it right away, right? But there's reasons for that. But then when the Ukraine-Russia war started going and then the Gaza thing happened, cryptocurrency started coming down, and a lot of people would call me and say, hey, Mukarram, why are you building positions in cryptocurrency? Because it's coming down. I'm like, yeah, but it's coming down has nothing to do with the crypto market. It has to do with outside the crypto market, right? So what I do at this is pay attention to the fundamental events that's causing a market to move up or down. If it's not related, but the market's coming down, use that time to buy more of that asset and build a net worth changing position, right?
Yeah. Yeah. So, I mean, that's similar to Warren Buffett's motto. When other people are really cautious, be aggressive. When other people are aggressive, be really cautious. Of course, you want to weigh everything with a grain of salt when it comes to that, because everything has risk, just as you mentioned a bit earlier on that. And so that was a great explanation on that, though. That's really excellent. Now, as far as investment performance, what have you been seeing as far as that's been performing very well? And I know that you definitely don't want to get into any type of trade issues or anything that would be a conflict of interest by promoting something or another. But what have you been seeing within the markets?
Yeah, I mean, let's give as much value as we can on that question, right, to the listeners. So the first thing is we've had kind of the best returns last year in physical metals like gold, silver, and our biggest winners were in cryptocurrency, okay? Especially the altcoins. Certain altcoins moved significantly last year. So there was a lot of returns for clients, right? Now, again, we just want to be, compliant by saying, hey, like you said, there is risk in everything and each risk is different, right? But for us, with the mathematical knowledge that we have, and then like mathematically primed positions when we take those positions, has given us great returns on that. Now, one of the reasons for that is a little bit from the previous question, is understanding how to hedge yourself, right? Like, for example, if you have a stock account, if you have a retirement account that's heavily in stocks or bonds, then knowing that, hey, we may have a recession that can bring down your stock account by 30-40%, it makes sense to diversify into something that goes up as the stock market comes down, which is like gold. And that's why gold did what it did last year, right? When geopolitical tensions were heightened, people were uncertain about what's going to go on. Money just started flooding into gold. But we were positioning in gold when gold was at $1,600, $1,700 an ounce, right? Not when it's at $3,000 an ounce. So today, I don't like gold as much. I believe silver is a much better trade than gold because silver hasn't had the type of move that gold has had. And gold has had multiple record highs from 2024 to 2025, whereas silver still hasn't broken its record high from 2011. So there's an arbitrage opportunity there. It's a massive opportunity, right? So if you're in gold, you've made money, I think it's time to get out. okay, and then take that money and put it into something that hasn't moved up as much. Now that's different to kind of what you mentioned about Buffett and his, when there's blood in the streets, you should be, I don't know, celebrating or buying, and when
Mm-hmm.
I don't think like that. What I think is how we approach the markets is we approach it in terms of a mathematical sense. When something is overbought, we want to get out of it. When something is oversold, we want to get into it, right? And
Mm-hmm.
overbought and oversold are mathematical terms and then technical indicators that will allow us to build big positions because we're swing traders, right? So it's the same thing with a client. Like if a client comes to me and says, "Hey, I have $1 million in the stock market. I have $500,000 in my IRA, or 400,000 in my previous 401k. I don't want to lose half of it. How do I protect that?" Well, there's a way. You can set up a self-directed IRA. Then we can help you transfer that with no taxes, no penalties. And then you can buy physical metals. Like last year, we would have bought gold, right? And then when gold went up, as the market came down, guess what? You not only protected yourself from losing money, but also you made money because of that action step that you took, right? And because you understood on how to hedge your assets. And then final point before I forget, you mentioned about real estate, interest rates and all that. I do believe we're coming to a point where interest rates should come down, but
Mm-hmm.
because of world events and geopolitical tensions, it is difficult to kind of reduce rates right now when you have certain commodities that have doubled in price, right? Like
Mm-hmm.
gold. Okay,
Mm-hmm.
so when you talk about asset-based inflation and things like that, but I think we're coming to a point where we will see that, right? And then there's a certain language that the Fed speaks, and you follow it, you can understand it. But there are conflicting factors right now. So I wouldn't be, and also the Fed's very limited, right, in what they can do. They can only do two things. They can either raise or lower interest rates, or they can increase or decrease money supply. That's it, right? So what you have to figure out is the broader things on what markets can move based on what's happening in the world right now. Like last week, we just saw oil go up $10 in 2 days,
Mm-hmm.
and then come back down $10, just 2 days ago, like a day ago. So that's how you have to view these markets with that lens.
Yeah, Mukarram, I love the fact that you're speaking about diversification because that's a huge piece. And I hear that amongst so many wealthy individuals that they're not just staying like set it and forget it in one asset class, but they've got several different income streams and also asset classes that they invest within. And that hedges them and that protects them from downsides within the market. And so I am hearing that from you as well, looking into gold. And if gold is not available or if it's been in high demand, maybe going towards the silver. And so I love the fact that you're looking around and not just razor or just locked in 100% on one thing. And so I'm a huge proponent of that myself in looking at real estate, looking at business and looking at other alternative investments as well. So that's really great. Mukarram, we want to thank you for coming on the show. You've been a wealth of knowledge. We could continue this for hours, just learning more and more because I can hear that you're well versed in what it is that you're doing, highly educated when it comes to the commodities and alternative investments, etc. If someone may want to learn a little bit more about you, I know you mentioned that you've got an educational component. How can someone reach out and connect?
Okay, great. Just to let you know, I have two entities, right? So one is Bullionite Asset Group. Okay. Now, Bullionite Asset Group was formerly called Blackstone Commodity Group, and we're in the process of changing the name, right? And you can see it on our website. So right now, you can go to blackstonecommodity.com, and you can see all of our alternative assets that we help people with, and you can reach out to me that way. The other is bullionite.com. Bullionite is my trading education, right? Where we help you not just with the trading, but the mindset that's required to be like a massive return generator, right? And that's bullionite.com. Now, also, if you want to reach out to me directly, my office number is 949-200-7047. So you can call me, leave a message. My executive assistants will review everything, reach out to you, and then set up an appointment. But those are the ways you can reach me. BlackstoneCommodity.com, which is also Bullionite Asset Group now, and then Bullionite.com.
Okay, that sounds great. Well, Mukarram, definitely thanks for coming on to the show. We'd love to have you back anytime. You was a wealth of knowledge, and I look forward to following you and learning a bit more about alternative investments myself.
Thank you, Eric. Thank you for having me. I hope we were able to kind of shed light on some things that people may be like a little bit lost on right now, and then if they want help. So I really appreciate being here.